Hey, what's up, everybody? Cowboy, and I want to offer a good morning to the Algo artisans. It is now 8:20 a.m. EST, and the CPI data is about to drop. So that's a big deal. CPI is it's what everybody's looking at as far as will Jerome Powell cut or hike rates. Well, that's if Jerome Powell is still around. Now, there are a lot of people who are watching the, Jerome Powell bad, Trump good, Trump bad, Jerome Powell good. They're fighting. Lest I remind you, in the words of Tom Luongo, yeah, Scott Bessent and Jerome Powell have lunch every Monday. All right. So if you think that these guys are, fighting each other and it's real and it's not WWF, then yeah, I don't know what to tell you. I'll just say that I have some Manhattan Bridge real estate for sale. You can contact me if you're interested in buying. Uh, Look, there's a couple things about the rates being up. First of all, the market determines the rates on bills and bonds. Okay. So now the Fed will agree to a rate at which they will sell debt and create debt through treasuries, right? And that whole process is somewhat complex, but I think it's pretty well known by now. I don't think I have to explain it to this crowd. Now, if you want to know more about that, feel free to ask, and I'll maybe make a video for you, or at least refer you to a video that explains it. All of that to say is that the CPI is going to at least possibly leave room for Powell to maybe cut 25 basis points or 50. I don't think he'll go much beyond that. I think the dot plot has maybe 2 cuts this year left. Now, I know that Trump wants the rates to go down so that they can generate capital to do all the things that he's doing. But in reality, having rates right now makes our debt attractive. And in the current environment, we need US debt to remain attractive because at some point, when the BRICS and China really start to gain steam, and they've got plenty of steam, but at some point when that really starts to catch fire, US debt's not going to be that interesting. We're a financial power. We're no longer the same manufacturing power that we used to be. So, you know, having rates a little bit higher than we think they should be, it's not a bad thing. In fact, one of the reasons that we're keeping rates high is inflation. We want to see what inflation looks like. Here's what it looks like. I'm going to go back out to a higher time frame, and we're going to look at the weekly. This is the NASDAQ. That's what inflation looks like. Going back to, 2020. Markets going up is inflation, just so you understand that. Everybody thinks, the markets are going up, the economy is good. Well, no, I'm not saying the economy is bad. I think we do have a debt problem, to be sure, in our economy. We have a major debt problem. But markets going up, it's just markets going up. And because we have turned into a debt-based financial economy that doesn't really manufacture things like we used to, borrowing money to finance basically more borrowing of money, that's no bueno over time. This is how depressions happen, right? There's a really good book by Ray Dalio. Let me get the name of this book. Ray Dalio book. Debt. Let's see if I can find the. I do think this is that it's at Principles. Is it this one? I think it's, here it is. The Changing World Order by Ray Dalio. He really explains this simply and very well. And I'm not being paid to share this. It's just a book that I'm actually reading. And it just talks about the cycle of empire. And it talks about at the end of every cycle of empire, there is more and more leveraging of debt. And that leveraging of debt is used to finance everything because we have gotten too rich to go to work to make things. It costs too much money for us to produce items in the economy. Okay. All of that to say that a slight change in the interest rate will make a big difference. So if today we learn that the CPI print is cool, that's going to show us that holding, at least according to the way the market thinks, and I'm talking about reality here. I'm talking about what is it going to do to market prices. We're talking about how can we make money trading this. Ignore the theory for a minute, at least ignore the lack of trust of the of the major narrative. and consider just what the narrative says. If the CPI print comes in cool, if inflation shows, maybe disinflation or less inflation than expected, then the expectation is we will see a cut, and we'll see it soon, maybe this next FOMC. And if that's the case, the market is going to go up because money just got cheaper. The markets are all financed by a debt. Technically, anytime you use money, that's all financed by debt. 100% debt. Everything's debt. Money is debt. So if money becomes cheaper to borrow, then financing the market becomes cheaper. More money goes into the market, prices go up. That's the theory, and that's how things operate when those numbers come out. So if we take a look at the NASDAQ or Bitcoin or any of it, we'll look at everything, right? And I think we're going to actually flip over to Bitcoin as the data drops, as the data hits. So everybody wants to watch Bitcoin, but really what you should be watching is the NASDAQ. NASDAQ is every bit as volatile if you're trading the way people trade NASDAQ. Now, we just got an all-time high like this morning. If I zoom in, the NASDAQ was at an all-time high about 2 hours ago. All-time highs, NASDAQ futures and NASDAQ itself, 23,193. Okay, that's crazy in this environment. But then again, is it? If everything's financed by debt, we have to ask ourselves is, does the market know that we're going to get a hot print and then all this push up is going to get eaten away? Was this a bull trap? Right? Now, I use a particular quant solution, and the quants are unable to determine what the CPI might be, right? They use data to try to predict what the CPI is going to be, hot or cool or anything. And they said no bias. So interesting, right? We have no kind of idea. Now, my gut says it might be a cool print so that Powell can have a reason to cut rates. And the reason I say that is because these numbers, I know everybody wants to believe that everything is okay, but these numbers are fake. I mean, I'm sure there's truth to them, but these numbers are easily fudged. The Bureau of Labor Statistics doesn't even give us the equation they use to calculate CPI. So that said, cool print probably means NASDAQ, Bitcoin go up. Hot print probably means they go down. Hot print means that this was a bull trap to get people into the market. Another reason this could be a bull trap is because this big move up, and I'm talking about if we go back in time to like the last few months, it's all retail. So the difference between retail money and institutional money is an important distinction. Retail is mom and pop. Institutional money is the big money. That's a very simple way of explaining it. It's more complex than that. So I do have a slight trade on. You can see it here. I'm at a first point where I would go ahead. I've already moved my stop to entry, and I do this now before the news in the direction I think it's going to go, and then move my stop to entry so that in case it goes in my direction, I can just scoop out some profit really quick. So as the news drop, I'll be looking at this and possibly, taking some profit. Bitcoin itself, it does want to head down a bit, right? I think it's going to head back down to about 112,000. Now, will it do it today? Will it do it as the news drops? That's another story. And we'll watch all this as the news drops, and that's in less than 2 minutes. So I'm going to go ahead and open it up to comments. I do have a fair amount of people watching right now. So if you're on YouTube, I think even X will allow for comments. I thought they all, I'm on Rumble, YouTube, X. I thought they all allowed for comments. So not sure what's going on there. But if you have questions, you say, hey, I want to see, this crypto, or I want you to take a look at the NASDAQ, which is what we're looking at. Not now, but soon. Or, hey, I want you to look at USD CAD or whatever it is, right? The CAD pair probably is pretty wild. But for now, let's go ahead and see what happens with my trade and see if I can scoop some quick profit. So I'm on a different computer. So I'm just going to have to leave the screen right where it is. And then I got to be ready to exit the trade if the market gives me a gift. I'm going to set that up. Okay, here we go. Market's moving a little bit, not hard. 630 hasn't quite hit yet, but the spread is opening up on my other screen in exchange. So, okay, there it is. Stop to entry saved me. It saved me. See, that's why I do that, right? I do that. Now, this might actually come and turn up, but I had this trade on as a zero risk trade because just in case the price moved up in my favor, right? So what I do is before the CPI, I'll get into a trade or any major announcement now, I'll get into a trade, a small trade. And then once it goes into profit, I will move the stop to entry. That way, if it goes against me, I don't lose anything. But if it goes for me, I make a lot of money. That's how I've been doing it. Been testing that out. And it's come to the time now where I think I'm going to start doing that so that the members of Algo Factory can see me do it as I do it, right? So given that the USD went down, I think this was a cool print and my gut was correct. We're going to take a look at what the print was. Cool print on core CPI. The print for CPI month over month, just not core but regular, was unremarkable. Just as expected, if you will. Now the year over year CPI was a little bit warm. So we're seeing a little more inflation year over year than expected, but the monthly trend is down according to the data. Is it real? Is it not? Doesn't matter. Let's go back to the charts and take a look at Bitcoin. Now that was this is a little bit of mixed data. Is the market going to pay attention to the monthly cool print or to the year over year hot print? That's the question. Bitcoin having a mild move up. That's on the 30-minute chart. Now, Bitcoin, according to my data, does still have some room to fall a little bit, but it could turn around right where it is. So we'll talk about that. Let's get into it. Look at the daily chart for Bitcoin. See, I think things might turn back around right now. I'm looking at other screens here. So Bitcoin made this massive move up. At Algo Factory, I made some good money, and I did it very publicly. I even did it on a live show on Sunday for everybody to see, for a different channel, though, not for Algo Factory's channel. And we won this move up right here. And everybody at Algo Factory got to see it live. Now, you're not supposed to be taking the same trades as me at Algo Factory, but I can't stop you from doing it. You're supposed to only use that as educational tools. So, there you go, right? In this case, though, if I were to zoom out a little bit, we are at a point where I think this is what I thought would happen last night. It went a little deeper than I thought, but I told Algo Factory as price started to fall right here, right? Back when it was up at about 120-ish, 120,000, I figured it would come down to grab liquidity from this area and then come back up. Because even though the daily is, a little bit bearish at the moment, the weekly and the monthly are extremely bullish, and that daily could flip right back around. And on the major trend, you're looking at this right here. Okay, so when this happens, price will want to come down to grab liquidity. Now, what does it do next? That depends on the major trend. And price may want to come back down and grab a lot more liquidity. And there's a lot more liquidity down here if you zoom out, right? So if you actually take a look at the major move, you got the major move up, back down, and then up right here. And then you have a lot of liquidity on a much grander scale in this area. And the top of it's at about 113. Maybe 112 is something. I could zoom in and be a little more precise with that. Let's say about 112,000. That's the top of that. So there's a decent chance here that price will maybe rotate a little in here and then make its way down to 112. We're just going to have to see. When price consolidates, it's going to break out one way or another. And we have a formula for that. We're not going to share all that right here and now. But I will say that there's a decent chance the price at least rotates between 116.6 and 118.7, right? So that's what I'm expecting for Bitcoin for now. Now, I may very well pull one of these. If I just had to guess like what's going to happen, like, hey, what's your gut say? What's the algo say? I'd say like this. And then it's going to probably break down. Maybe not make it all the way to 112. Somebody will front run that. And then we'll see what happens after that. There's a decent chance, though, once it makes it down to here, it's going to move back up. That's a decent chance of that. Now, as these things happen, the algos will give me more clues. I'll be telling Algo Factory what that is. I'll be telling Algo Factory, hey, I think this is going to happen. I think that's going to happen. And if you ask Algo Factory members who are in the audience, I'm pretty deadly accurate these days and always have been pretty good. But right now, the most recent algo I've been building is just witchcraft. So let's take a look over back at the NASDAQ. Yeah, so NASDAQ moving down, but you know what? It's not pulling back in a way that's like, oh my God, it's dumping. Like, this was mixed data, right? We had yearly hot CPI month over month, a little bit cool. And it was only a little bit hot and only a little bit cool based on the smallest increment that they're allowed to report, right? So let's go back to that screen so I can explain what that means. So here you have core CPI 0.2% versus the expected 0.3%. Right, so this it's behind my head. I'm going to have to change the screen a little bit so that you can see it. Give me just a moment. I don't know how the heck I'm going to do that. Let me put it above my head so you can actually see it. So let me highlight this. So you see it here where it's 0.3%. Like right, my hand can only point so far. But wow, this is so weird. It's backwards. Like right above my head where the mouse is, that 0.3, that was the expected. The actual is 0.2. Now that's month over month for core CPI. That means compared to last month, it was a little bit cool. Inflation is down a little bit, is what that's signaling. The one below it, month over month CPI, that's core and non-core, that came out as expected. And core and non-core, I think core excludes fuel, food and energy. That's what core excludes. So if you look at the actual CPI month over month, including food and energy, it's not cool, it's not hot, it's as expected, right? And then you have CPI year over year, which is a little warm. And I believe CPI year over year includes food and energy, and it's just ticked up a little bit. And these are just the smallest increment by which these are allowed to be measured, right? And have a tick above or below the expected. So the news itself is not monumental. I would say that this move up did bring a lot of people into the market, probably got some bulls excited. This is the NASDAQ, by the way. This is what a lot of people are paying attention to because tech is going. Valley Girl, thank you very much for the kind words. I appreciate that. Yeah, 99%. I wouldn't say I'm that good. I'm glad that you think I'm that good. But definitely a profitable percent of the time. Let's put it that way. I get some trades wrong. Look, your best traders out there are going to be at like 70, 75%. That's, no one makes them all, but Valley Girl, I love you either way. Thank you for the kind words. Okay, so now the USD JPY is reversing back up. So this was a shakeout designed to get people out of the market. Now we're seeing a market breakout. It'd be a little bit dangerous to trade at this moment. Let's take a look and see. Now you get to see the algo. Of course, I'm not going to explain it to you all, but I really could, should I want to, go ahead and risk a long right here, a long breakout trade. I am going to risk this. Stop loss will be at 147,930. I'll make a stop loss at 147,930. And I'm going to enter this trade on another screen. Okay, if I can not fat finger everything. And then I'm going to double the position size because I moved more towards my standard position size. The position size I took that was kind of that gambly position size, that was just gambling on the news and limiting my risk and all that. So I think I entered right about here. Let's see what my fill price, 148.03. Yeah, right there. Wow. Right where it is, like right now. And then my stop loss I have at 147,930, which is pretty close to where I have it here on the chart, but we'll do like this. Let me zoom in. Okay. Now this is a predetermined take profit. So I'm just going to use that. And the take profit is at 148.32. All right. So I'm going to put that in. Okay. So I let the news, like I don't trade the news per se. Like the way I trade the news is the way I explained it in the beginning of the show. where I get into a position that has a good probability of getting into profit prior to the news. If I look and I'm going to trade and it doesn't look like there's enough volatility or the conditions are not correct for getting me into profit prior to the news coming out, I don't take it. But if there's a good probability that I can get into profit before the news comes out and then raise my stop loss up to entry, meaning that if it goes against me, I don't lose any money, then I'll take it. That's worked for me. I've been testing that. You got to risk it for the biscuit, right? So in this case, though, all the people who went long got knocked out of their trades, right? Now, my stop loss was at entry, so that didn't hurt me. I protected against this kind of a move. So all the people who were in the trade, maybe they got in here, maybe their stop loss was, down here because they thought they were protected by some of this structure, like right here. Here's what I'll do is I'll delete this so you can see that. All these people who try to take this trade right here, or maybe even try to take that trade, whatever their method was, well, they got knocked out of their trades. I had a similar trade, but my stop was at entry. So when price went down, and I actually got in way earlier, I got in down here, right? But because price might spike down like that, I had to stop at entry. Like I said, if price spiked up, I would have just gotten out of the trade and taken profit. Now, in the meantime, we're going to move back to what my trade is, and we're going to see that it continues to be in profit. Now, in the current market conditions, it's a little bit risky. As soon as this high breaks right here, because we're in the middle of market madness, I will go ahead and move my stop to entry on this. Now, it's broken, and I said as soon as it breaks, but I need this candle to close. I could safely do it now, and I'm nicely in profit. I'm better than a 1-to-1 right now. So right now, if I took profit, I would be at just above now about 1-to-1. Meaning if I risked $1,000, I'm up $1,000, right? Now, I'm not saying I risked $1,000. Sometimes I risk less, sometimes I risk more, but it depends on the account. But for such a risky account, it's usually relatively small risk. Some people might think it's a big risk, depending on your point of view. But right now, what we have here is from a candle theory standpoint, price is bullish, algos are bullish. Price did try to come down right here and got pushed back up. So right now it's a pretty bullish scenario. Price is kind of fighting and ignoring, I should say, price is just in a conflict right now. But right now this is kind of bullish depending on how the next candle looks. But as soon as this candle closes, I will go ahead and limit my risk. In fact, I might do it sooner. Let's take a look at the algos themselves and see what they say. And you know what? This is still pretty bullish. Yeah, this is still pretty bullish. We'll see. We'll see about it. I just have to let this play out. This is very bullish right now. This is the USD JPY pair. Let's move over. We're just going to let this trade play out, win or lose. Let me set some alarms. And we'll go for it. This news gambling, man. If you can't take the heat, you step right back out the kitchen. Let's put on. Well, I got to shoot a line here. What is it? My stop loss is 147.93, 932. So let me set an alarm. We'll see if I win or lose. Over 7,932. It's fine, close enough. I'm on a different exchange, so these numbers are not exact anyway, but I am going to go ahead and set a stop loss alarm. All right. And then I'm going to go ahead and set a take profit alarm. Now, there's a lot of hucksters in the trading space, okay? There's a lot of people that talk about their method or they're trying to shill you something. I don't share my method with anybody. No one gets to see that because I've worked very hard over years to refine and develop and refine. And anybody at Algo Factory is going to tell you that I'm like, for lack of a better term, I think honestly, as a child, I would have had an autism diagnosis. And because I had to survive in the world, I just figured out how to be social because I was very antisocial. I used to walk around the playground alone and stuff. I had these weird things. I didn't get interpersonal cues My dad swears that if it was like nowadays and I was a kid, I'd be given a diagnosis. Whatever the case may be, I tweak on charts without drugs. I just tweak out on charts like 15 hours a day. I just sit here and just refine. It's I don't know. I like it. I like pain. I don't know what to tell you. So maybe it's pleasure. I don't know. Point is, though, we're going to leave this behind. Look at Bitcoin. Bitcoin just ranging. No real action on it. It seems like the news had a bump, but I can tell you the daily now is a little bit worn out. Now, when I took that winning trade, that long that I took 2 days ago, very publicly, the daily wasn't tired out yet. The daily is showing signs of getting tired, but also understand that sure, it's getting tired, but the weekly and the monthly are so bullish. This is the weekly, right? And in particular, the monthly is very bullish. So that daily could flip around at any time. But as it stands right now, I think the probability of Bitcoin at least coming down to grab that liquidity at 12,000, that is extremely likely right now. Just very, very likely. This was a bull trap, if you ask me. Now, I caught the win. I took this long and I made good money on that. I made like, I think, three. Well, the public trade I took was like 2.5 to 1 risk to reward on that. But then I took another trade privately, and that trade was like a 3.5 to 1. So it's putting in $1,000 to pull out 3,500, and it went all the way to target. In fact, it was a very precise trade. So that said, right now I think we're looking at maybe not even a bounce. It might bounce in here, but I don't think it will. Just based on what I'm seeing right now, it might try to bounce in here and then even have a little bounce and then just, rotate down this way. I think that's what we're kind of looking at. Okay. So that said, we'll see as the rest of the morning wears on and I'm able to kind of look at things. We'll see how that goes. That's Bitcoin. Let's take a look at Solana, and then it's going to be time to go to the private live lab. I did an extended show this morning live for everybody to see, just so you can see what there is to see. Solana is just very kind of calm and quiet, right? So I think, let's look at Bitcoin dominance. Let's give I do a special Bitcoin dominance formula. It's BTC.D divided by parentheses 100 minus BTC.D. Bitcoin dominance is a metric that evolves over time. And so the problem, okay, that's why there's an S here. Okay, Bitcoin dominance.d, Bitcoin tether. Okay, let's redo this. BTC.d divided by parentheses 100 BTC.d. So this makes it congruent, is what it does. Not Litecoin. Good Lord. That's fine. Okay. Why is it not letting me do this? BTC.d divided by 100 minus BTC.d. Let's just do that. So because the market is always evolving, I use this so I can look at longer term trends and make sense of it, right? And Bitcoin dominance has been falling, but you know what? It's still on a pretty big uptrend on the weekly. And really, Bitcoin dominance has been doing nothing but going up since August of 2022, since the bull market started. Now, prior bull markets, you would have a move up, and then you would have the Bitcoin dominance start to fall off, right? At the end of the bull. But it's really hard to kind of judge, that's good. It's too hard to judge, okay, so Bitcoin dominance on a downslope like this over time means less money in Bitcoin because the altcoin market started to occur. But that was going back to 2015, right? So data before 2017 is the market before 2017, before altcoins really were a thing. But if you move it to like 2017, 2018, you notice that dominance rises through the bear, peaks before the bull, and then heads down. And then you see it really flat in the 2021, 2022 bear. And then as the bear goes into like the true bear winter, dominance has only gone up. Bitcoin is only getting a greater and greater share of the market. And what that tells me from a high time frame thesis standpoint is that altcoins are trusted less and less and less. Okay. And I don't expect that to change right now. We'll see what happens once the top is in, meaning that once the market has decided that Bitcoin has peaked for this 4-year cycle. We might see dominance fall a bit and the altcoins really play. And how violent that is, or how volatile that is, will give us some clues as to the true state of the market. USD JPY gamble starting to be done. So we'll roll back and look at that trade really quick. Again, I'm going to let this ride. This is going to be a lot of market jitters, but I do want to take a look at what the algos are saying. Still bullish. Look, it's short-term risky. It's a low time frame trade, but in the end, the algos are still bullish. So I'm willing to take a loss on this one instead of like protecting my position. I'm willing to take a loss on it because I have price protection right here. So we'll let this ride. Yeah, I'm not going to worry about it. All right, well, this has been fun. I'm going to move over to the private live lab. Go to the description, right? I give away a free algo in there, but what's more important is that all you have to do is give us a fake name, real name. We don't care. Just give us an email address. And what I'll do is the next screen will be an algo. You see me build it. You see how it's done. Now, when I do algos, it's not like I'm computer coding or anything like that. What I'm doing is I'm merely taking the data on the screen and creating a trading method. You can call it old school if you will, but that's an algorithm. And I give you one now. If you don't understand how to properly test algorithms, how to properly trade them, you're probably not going to make money if you try to trade it. If you are an algo trader already, then it's probably going to be reviewed to you, but it'll give you some new ideas possibly. So don't think you're going to take this algo and get rich. It's not what it's for. It's for you to educate yourself. Now, it's profitable when I trade it because I built it and you get to see how I built it. So just go to the description, click the link, fake name, real name, email. We'll send you that. And I do a weekly update, usually on Mondays. That's the schedule. The new schedule for the update is market updates are on Mondays, so that I can do a weekly forecast after the market open. But this week is going to be today because the CPI came out and I didn't know if it was going to be a big deal or not. So I'm going to have that done. We'll see in the next few hours if there's time. But in the meantime, I am going to head over to the private live lab with Algo Factory. And so algofactory.tech is where we teach you how to build these algos, right? We teach you the methodology so that you can build your own algo. And I'm going to tell you right now the secret, the dirty little secret about trading and algo building is that I could give you my best algo and you'll probably fail. You will probably lose money. Even if I gave you my most profitable algorithm, there is a very high probability that you will lose money. And the reason is that trading is not what you think it is. If you're like new to things and you're not a trader and that kind of thing. Trading is mostly homework. The actual trade is like 1% of trading. And you have to get your psychology right, and you have to get your method right, and you have to get your business management right, your risk management. You have to do a lot of things that we teach over at Algo Factory. We hope to see you over there. Thank you all for watching. And also, never forget,
join us or die.
Just kidding. Just having some fun. You're not going to die. We love you. That's just Alan Rickman jerking your chain. I'll be back live tomorrow. And if you are getting on the list for the weekly forecast, I'm going to send that forecast out later today via email. So hope to see new people on the list. That's fine. If not, we'll see you live when you come back. I do this Tuesdays, Wednesdays, and Thursdays, and I do it at 8:30 a.m. EST. I started a little bit early today, and if PPI is tomorrow, let's see, I think it is. PPI Wednesday. Yeah. So I'm going to start a little early tomorrow. I'll do 10 minutes early for the same kind of reason, right? Now, PPI probably not going to hit as hard as CPI on the news. Either way, we're going to see what we can do. In the meantime, thank you for watching. We'll catch you on the flip side.